morning. I'm Emily Beckett, Digital Marketing Specialist at Sprague.
And I'm Joel Williams, Director of Refined Product Sales here at Sprague.
Welcome to Sprague's Refined Products Review, where we share what's moving the market, giving you insight into what we're seeing every day. Well, Joel, it's been a crazy week so far. What happened Monday going into Tuesday?
We look back at Friday, Trump came out and put an ultimatum out to Iran that said, open up the strait or else. And the or else sort of kind of was around the, going after more infrastructure, critical infrastructure within Iran, particularly the energy infrastructure. And so over the weekend, the markets are closed. The markets kind of think about that a little bit and see what their thoughts were. And market opened Sunday night, and into Monday morning, the market was up 20 cents. So basically, the market was saying, all right, the risk here is real. Let's see what happens. And then all of a sudden on Monday morning, Trump came out and said that he was going to pull back on the ultimatum, and that there was peace talks ongoing, and that he had hope that there was a chance for the reopening of the strait and continuing peace going forward. The market reacted obviously very favorably to that. We saw the Dow up quite a bit, and then we saw oil prices down 50 cents. So you go from up 20 cents to down 50 cents in the course of a couple hours is pretty crazy. And so that's what's happened there. We saw the market settled about 50 cents down yesterday. That was Monday. We're taping this on Tuesday. Today, we're seeing the market up another 20, 25 cents. So, the challenge that we have now and going forward is that you get these sound bites that come out that, obviously Iran said there is no negotiations going on. So the market's having to kind of gauge what is true and what isn't true. And, is the market just overreacting to news bites? And so I think we're kind of in a cycle now where, actions will speak louder than words. And so, words will continue to move, but I think everyone's, right now waiting to see what really happens here.
So with the markets gauging what will happen in the future, which is difficult to do, can you tell us a bit about what has happened that we know to be true?
There's no question there's been a pretty material impact to the market at this point. I mean, 300 million barrels of crude have not made it to market, and most of those will never make it to market. I mean, those wells have been slowed down. So, that's a sizable impact, something that we haven't seen before. And so, the market right now, it's starving for crude, and it's starving for products. And as such, you're seeing prices remain high. The physical prices are often even higher than the market prices. I think, what we're seeing here, this is an historical event, a once in a generation event. And, the market is constantly trying to figure out how to price this all in. And the physical prices are crazy. I mean, everything, it's kind of, will continue to be quite a bit of turmoil here as we move along, and everyone's trying to digest what's really happening here.
And back here in the Northeast, what's happening?
Yeah, that's a good question. So as we look back here at the Northeast, there's obviously a lot going on as well. The crunch is really starting to hit us here. I think the last few weeks we hasn't been as tough. What we're seeing now is that, in the last couple of days, we've seen over a half dozen cargoes load in New York Harbor full of distillate fuels and taking them over to Europe. And that's not something that we normally see. Normally the product coming into New York Harbor is for the Northeast. And, if anything, when in periods of higher demand, we actually see cargoes coming in from overseas. So, we really haven't seen cargoes leaving the Northeast since the sort of the beginning of the Russia-Ukraine war at this pace. And, that is signaling that there is a real desire for the products. And so it's starting to hit home now that we are really competing for fuels in our own market with markets overseas as well that are very desperate for our fuels.
And so what does that mean for prices?
Any increase in demand for products in our market generally would lead to an increase in prices. I mean, that's sort of economics 101. In the absence of anything to kind of stop those exports, such as an export ban or something else to curtail them, what you're going to see is that, Europe's demand isn't going to go away. And its supply, it's really, they don't have supply from Russia. Now they don't have supply from the Middle East. So they'll continue to look at supply from us. So I think we'll continue to see this environment exist for the near future at the very least.
And in regards to inventory, will we still have enough in the Northeast?
Yeah, that's another good question. I mean, we're obviously looking at Europe drawing barrels from our market. And the good news is those barrels would rather stay in this market. So, rather than having to drive an ocean away, it's easier to leave them in this market. So we do have access to them. But we only have access to them if we're willing to pay the price. quite honestly, because at some point the price to go to Europe becomes better than the price to sell here. And when that happens, sound people will make financial decisions. Companies will do what's best for their bottom line, and those oils will go to Europe. So we are going to see a little bit of a supply crunch here. I would say the bigger thing that we in the Northeast should be talking about and be concerned about is the backwardation in the market. And we've talked about this word before, kind of explained it. Backwardation has to do with the future months being worth less than the front month. And what it really is, in the simplest terms, it's the market saying that it desperately needs your fuel now. And that, it's providing you a huge incentive to sell any last drop of inventory you have now and not carry any inventory. And to give you kind of an example, if I was to buy a gallon of heating oil today and hold it for the next month, I would lose 30 cents a gallon by just holding that heating oil gallon. If I was going to wait 2 months, I would lose 75 cents a gallon. And if I was to wait 3 months or more, we're talking $1 or more. So, and in our part of the supply chain, the challenge is that we work in a supply chain that's pretty efficient, but runs on pennies a gallon. And so when you're talking about revenues in the pennies of gallons and you're talking about costs in quarters of gallons, something's got to give there. So that will remain a challenge for our industry and for some wholesale suppliers in these markets, is really that, we're going to have to start minimizing the amount of inventory we carry because it's just too punishing to do it. And at some point, the costs are going to have to be reflected in the market in order for wholesalers to continue to have the incentive and the ability, quite honestly, to maintain inventories for this product, in this market. So we do have a lot of challenges that we're facing now, and taking a look at how we can address those.
So what final thoughts can you share?
This is going to get challenging, and so I would say, continue to keep in touch with your suppliers. Continue to build those relationships. We're here for you. Let us know if you have any questions. We've been doing this a long time. We have a plan. We know how we can handle it. And we know who the people are that have been relying upon us, and we're going to do everything we can to be there for them. So I would say, again, this all comes back to, in this business, partnering and being partners is the best thing that you can do at this point.
Well, thanks so much for joining me, Joel.
Yeah, thank you very much for having me, Emily.
If you haven't seen it yet, be sure to check out our latest monthly feature, a panel discussion with Sprague's Women in Leadership, available now on our YouTube channel. And be sure to mark your calendars for our next special feature, A History of Sprague, releasing Thursday, April 2nd.
Yeah. Well, that's all we have for today. Thanks for joining us. We'll be back next Wednesday with another Refined Products Review. Refine your insight.
Fuel your success.
Not too bad, pretty good there.
I think
I think it's nice. You really are up on the bar for Steve here. So
Yeah.
I don't know.
Someone's got to do it.
May have to replace him. So yeah.